Susan, I hate to admit it when you're right, but we could have canceled that meeting and opened up the special session. Now we're in the old meeting with the budget presentation, and once we finish, yeah, this one says special meeting, special budget session agenda. Is that what you mean? Yeah, an item, there's a budget presentation on the old one. So just so that we don't get into trouble, we're gonna have the budget presentation on the old one. Once we finish that, we're gonna open up the special session, and we're gonna dispense with the brief budget review team presentation, okay? Whatever gets us through the night, as long as it gets us through the night quickly. Okay, we're gonna start with the county administration, office and management budget. This will be a presentation summarizing the recommended fiscal year 2021-2022 budget for Yuma County, and there will be a dreaded PowerPoint presentation.
Second that.
Good afternoon, Chairman Reyes, members of the board. I'm pleased to present the recommended budget for Yuma County for fiscal year 2021-22. The recommended budget is the result of months of work on the part of our staff in the Office of Management and Budget, Financial Services, Human Resources, County Administration, and the directors of the county and courts, departments, agencies, and offices. And I want to thank all the staff involved for their hard work to date on the recommended budget. The county identified a number of goals going into the budget process. We take a baseline approach, meaning that we look at every expenditure from the ground up to determine the necessity for that expenditure and the appropriate funding level. We also carefully review every request for resources, determine the need, whether one-time or ongoing. Due to the efforts of our staff and the Yuma County Employees Benefit Trust Board, health insurance premium rates will increase by a modest 3% for the coming year. Due to minor health plan adjustments, the actual dollar impact on employee monthly contributions will be very small. The board also deferred a previously planned 1% shift from 39% to 40% for the employee share of dependent premiums to minimize the impact to county employees. For example, the PPOA plan will increase by $1.07 per pay period, and the high deductible plan has a zero increase. Yuma County continues to provide one of the most generous and affordable healthcare programs in the region. I'm also pleased to say that the recommended budget includes a compensation adjustment of approximately 3%. This is composed of, first, a half step, roughly 1% for all pay plans effective the first full pay period in July, and two, funding for an additional step, roughly 2% for eligible employees who meet or exceed expectations on their performance evaluation effective the first date after their anniversary date. This would be available for all pay plans except the elected officials' pay plan. The budget also includes compliance with the state's mandated minimum wage, which will increase again by the cost of living on January 1st. Continuing impacts and recovery activities related to COVID-19 will affect our health department as well as the rest of the county. We have actually established a special revenue fund with a significant appropriation to account for the American Rescue Plan revenues that we will receive soon. Yuma County's charges for Altex, which is Arizona's long-term care system, will be going up by another $650,000 on an ongoing basis. The state legislature is in session and continues to consider bills that may have a detrimental impact on county operations and expenses. One bill, for example, would reduce commercial taxes and cut county revenues by $775,000 to $1 million on an ongoing basis. We have set aside some funds to account for this expenditure, but we'll be recommending more to set aside as we go into the tentative budget. Increases for state pension plans, for ASRS and EORP are driven by formulas established in each plan, and we have to accommodate those as well. The board has been proactive in setting aside funds for the last several years to provide for a sustainable vehicle replacement funding mechanism, and this year we will transfer $1.5 million to the fleet management program to start up this internal service fund. And continued focus remains on fund balance policies for the general fund and our major district funds. This chart summarizes all funds for which the county is responsible and appropriations as recommended compared to the current budget. I would like to note that the county appropriates the fund balance reserve in each fund. This is to anticipate and prepare for unexpected events that may require use of those funds, because if the money is not appropriated, it cannot be spent. The general fund major increases include transfers out for the capital improvement program, the fleet management program, and new CIP debt service, as well as the PSPRS debt service of $1.5 million. Special revenues, as listed here, includes all the county's major districts, including jail, health, library, and flood control, as well as the fund we set up for the American Rescue Plan funding and other future grant awards. Debt service increases include the payments on the recent pension bonds that were issued for PSPRS and Corp, as well as new debt associated with proposed capital projects. I want to note that the board's action to issue pension bonds to eliminate the unfunded liability for PSPRS and Corp will save Yuma County taxpayers more than $19 million in present value and savings over the next 30 years. Our capital projects fund includes funding set aside for 197 South Main Street, the Health Department, ITS, Facilities Management and Public Fiduciary Building, the Jail District capital projects, and Tacna Water Improvement District, and other CIPs. Internal service funds include Fleet Management and the Health Benefit Trust Board. Our major fund of note is the general fund, and revenue categories are shown here. The largest three sources of revenue are shown at the top, and these are the county sales tax, state shared sales tax, and county property tax. The differences from our current adopted budget to next year's budget reflects the conservative approach we took in budgeting revenues last year at a time of COVID-19 uncertainties. Revenues have set record highs in county sales tax and state shared sales tax revenues. The general fund uses are categorized as expenditures, which include personnel and related expenses, supplies and services, vehicle and equipment, and contingencies. Transfers out to other funds, and reserves or fund balance. This chart shows the very strong fund balance we're experiencing this year and anticipated for next year, well above the board's adopted policy level of 20%. Recommended fund balances for the county's general fund are shown here. It's important to keep a healthy fund balance in case of emergency or some unexpected reduction in revenues during the course of a fiscal year so the county can continue to provide needed services to the community. This chart is a visual representation of the higher than anticipated fund balance in the general fund. This balance of one-time funds allows the county to address needs that it would not otherwise be able to address. Some possible uses for the additional fund balance in the general fund above the 20% policy level are shown here. PTO buyback. The board makes a decision each year during the budget process as to whether the county will offer PTO buyback to employees on a one-time basis. The possible payout for employees who meet the policy requirements is shown here using a proposed buyback of 5 hours minimum to 20 hours maximum. I mentioned the legislative impacts earlier, and we would recommend that that amount increase from the current $350,000 to $1 million for a net increase of $650,000. Yuma County has a very modest amount of debt. The current total of general fund interest-bearing debt is slightly less than $11 million. This does not include the recent pension bonds since they are not callable for 7 years. The board may want to use some one-time fund balance to pay off this debt, or use $11 million in cash to pay down the cost of a future administration building so that the debt issuance is much smaller. Greater Yuma Port Authority. Chairman Reyes and I serve as the two county representatives on the GYPA board. Market demand is heating up for land in the Magrino Industrial Park near San Luis Port of Entry 2. All previously developed lots have been sold. The cost to develop the remaining vacant land in the industrial park into developed lots is estimated to be about $4.5 million. Funds would be recouped as the lots are sold. Core Engineering is currently working on a more accurate estimate, and I'll share that as soon as we have it. And Federal Payment in Lieu of Taxes, or PILT. This is an annual appropriation made by Congress. There's no certainty from year to year whether they will appropriate this fund. And $3.8 million accounts for about 5% of the county's general fund, and it would be a significant loss. The fund balance for the health district and jail district are shown here. The policy for the jail district is currently 5% fund balance, and we would recommend that this be increased to 15%. If the board is in agreement, we'll bring the policy back to you for further revision. And the fund balance for library district and flood control district is shown here. The library district is currently 25%. The budget review team would recommend moving this to 30% due to cash flow. The district receives property tax revenues in October and May, but they have to start operating beginning July 1st on their cash reserves. So if the board is in agreement, we'll bring this policy back to you for revision as well. Recommended staffing for all funds is shown here. During the budget process, the review team carefully scrutinized requests for new positions for next fiscal year. The recommended budget includes a net increase of 4.375 full-time equivalent positions from all funds, and the details are shown on the next slide. At the top of the chart, you'll see 2 grounds maintenance workers recommended in facilities management. These positions at associated equipment are intended to take better care of our existing and proposed parks in unincorporated Yuma County. We're also recommending a technical services manager for facilities management with expertise to supervise and assist with technical work on HVAC systems, digital controls, and security systems for all county facilities. We're also recommending 2 additional sheriff's deputies and their vehicles and equipment. It will be prudent to add a small number of additional deputies each year to keep up with growth and response times. We have 3 ongoing projects and 12 new capital projects in the general fund. I won't go over the ongoing projects since they're currently underway and you're very familiar with them. New projects include the first 2 new facilities that we've talked about, potential new facility for ITS, public fiduciary and facilities management, and health department building, whether it's renovation or new construction. Also, the remaining are required maintenance and repairs for our heavy equipment and facilities equipment such as HVAC and roof repairs. Again, further repairs and heavy maintenance on our systems through our county facilities are shown here. The Foothills Multipurpose Complex is also known as the Foothills Park. There'll be more information tomorrow provided on these capital projects. In special revenue funds, we have 2 ongoing and 5 new capital projects recommended. These include projects in the Highway User Revenue Fund, Library, Jail, Flood Control, and the TACNA Water Improvement District. The TACNA SHOP proposal for Public Works includes only design in fiscal year 21-22. Overall, we're recommending no increase to the combined property rate for all funds. The tax rate in the general fund is recommended to remain the same as the current year. The library recommendation is also the same overall tax rate, consisting of an increase for operations of 0.0037 and an offset by reduction in the debt service of the same amount. The recommended budget also includes the same tax rate as the current year for the flood control district. In the next slides, I'll go over the assessed value and general fund property levy. So as reported by the assessor, county net assessed values increased an overall average of 6.15% from fiscal year 2021 to fiscal year 21-22. The value of new construction increased by $34.3 million compared to $21 million last year. The recommended tax levy amount for 21-22 is just over $34.2 million as recommended with the current tax rate. If someone's individual property increases by 6.15% in value, then the amount that they would pay in taxes for all county districts would increase by $30.02. So the steps in our budget process concludes today's presentation. Today and tomorrow, the board will conduct budget meetings with all departments, agencies, and outside parties. On May 4th, at the end of the department presentations, we have set aside plenty of time for the board to discuss in depth any issues or ideas or suggestions you may have regarding the recommended budget and changes you would like to see going into the tentative budget. On June 7th, the tentative budget will be adopted, and on June 28th, the board will conduct the required combined budget hearing and truth and taxation hearing and will adopt the final budget. That's all I have at this time, and we would then move to discussion and possible action, item number 2, on the budgets for various departments and agencies.
Right. First of all, Go ahead. I mean, before we go into that, this was the budget presentation. I just want to make sure that we can combine both these meetings or end one and start another one, whatever is technically more correct. Shall we just, this was actually on the old, the old agenda, the first agenda, and it was just a budget presentation, which is what you've done. This basically takes care of all the items we had for the morning session. I'd like to, end the morning session and open it up for the afternoon special meeting of the Yuma County Board of Supervisors
Okay.
with the special budget agenda. So is that okay?
Yes.
All right, so before we get into any discussion about the budget, this ends the morning session, okay? So I am now opening the special session of the Yuma County Board of Supervisors. We're sitting as all special taxing districts, and this is the May the 3rd, 1 p.m. We're starting a little late. This is the call to order. We already had the Pledge of Allegiance this morning. I don't think we need to repeat it again, but this is a special budget work session agenda, or not work session, a special budget session agenda. And the discussion and action items, we already opened up the briefing by the budget review. We already had the briefing. Unless there's something to be added to that, is there something to be added to the presentation? No? All right. Then, and I remind the board members, please write down your notes. At some particular point in time, we'll be talking about the specific items. Right now, we are going to go into item number 2, which is discussion and possible action on the following recommended department budgets for fiscal year 2021-22. And we'll begin with the Greater Yuma Economic Development Corporation. The way we'll do it, the way we've done it all the time, is you would tell us what page it is on, we'll find it, then we'll get to it, and then we'll ask the representative of Greater Yuma Port Authority to come forth and tell us what she...
YDC.
Oh, YDC, excuse me, YDC, I'm sorry.
Good afternoon, Chairman Reyes, members of the board. Lucia Gomez, Budget Manager. You will find Greater GYADC is in the non-departmental line items, page 11 out of 25, and it's an electronic version that you receive on your USB. They don't have their own department pages. They are under the non-departmental pages as well, under page 260 of your budget book.
You better assume we don't have the, the
USB.
USB.
200
So,
and...
let's do it the old-fashioned way, which is you tell us which page it's in, and we'll take it from there.
What pages?
200 what?
260.
Thank you.
Right, thank you. 260. We all have our books, right? All right, got it. All right, so go ahead.
Julie Engel, President and CEO of GYDC, is available for questions.
Chairman Reyes, members of the board, thank you very much.
Are you okay with your budget?
We received word that our request was accepted, and we're very happy with that. So we don't have any...
Additional request or no reductions at all? No reductions at all, huh?
Oh, a million, it would be nice, but no, we're good. So thank you.
Questions from Julie? If not, Julie, thank you very much. And, I hope everything goes, goes like this. Set up a very good tone. So the next one is?
Next, we have Crossroads Missions. Myra Garlick, Chief Executive Officer, is available for any questions. Their department pages are on page 260 as well.
Good afternoon, Chairman Reyes and Board of Supervisors. Thank you very much for supporting Crossroads Mission all the years that you have. And we continue to provide services to Yuma County. Last year, COVID hit us. It was tough, very tough, like it was for everyone else. And we just keep pushing forward and doing our work. And I'm here for any questions that you might have. Susan Jorgensen, our finance director, always comes with me. And if there's questions I can't answer, which is probably right, she'll answer them.
Actually, all we want to ask is, are you okay with the set aside?
Oh, it could be more, but I'm happy.
I shouldn't ask that question anymore.
No. Well, you asked.
Just sort of give you an opportunity to say something, but, so you're fine, you're okay with the amount?
Yes, very
Could
much
always
so.
be more, let's put it that way, but.
Thank you. Thank you.
Okay, any questions? No, thank you very much, man.
Thank you. Have a great day.
All right. So the next item
Next,
is-
we have Cooperative Extension, Russ Engel, Cooperative Extension Directors, available for any questions. Their budget pages are page 260.
Do we give it too much?
We're good with what it is.
Are you okay with
Yes,
the budget? You're
yes, sir.
fine?
We appreciate all the support the county gives us. It's truly appreciated. It lets us do all the programming that we do, so.
And we appreciate the joining of efforts to make sure that the University Extension does well.
I just have one question.
Yeah.
Where did you get your face mask? I'd like to get one of those.
Sorry.
No.
They'll be for sale in the
But
lobby.
we're waiting for we're actually expecting U of A face mask.
Yeah.
Anyway, thank you very much.
All right,
Okay?
thanks.
Oh, wait a minute. Did you have any questions?
No.
And I have our annual report from 2019. Our 2020 is not published yet. Most of you got this last year, but if anybody would like a copy, I'll just leave them here and you can get a copy.
Thank you. Appreciate it. I'm not tearing up your budget. I'm just tearing up the budget.
Yeah, as soon as I turn around.
Yeah. Anyway.
Next, we
go
have
ahead.
Next, we have the Board of Supervisors budget. Susan Thorpe, County Administrators, available for any questions. Department pages begin on page 146, staffing page 146.
Are you okay with your budget, Susan?
Where do we
I
start?
don't think we have much to say about it, but, you okay with your budget? Are you okay? We're not, but you okay, right?
With your budget.
So any questions, any comments?
What if we're not happy?
We like to have the emergency fund increased to 3 times the size, but, we're gonna leave that for some other time. Nothing? Okay, guys, then we'll move on to the next item.
Next, we have the County Administrator's Office. Susan Thorpe, County Administrators, available for any questions. Department pages begin on page 165, staffing 166.
We're not happy with it. Susan, it's yours now, really. The other one was actually ours, but this one's yours.
Yes, I'm
And you have some
pleased with our
feedback.
budget and would answer any questions that you might have.
Are we gonna get into any of the different segments, like emergency management or risk management, conflict administration, or are we just going to, or are you going to split that up?
Yes.
Oh, okay.
Yep.
All right, so you're okay with the administrative budget,
Yes, sir.
which you said that before. So, what's next?
Next, we have County Administrator Emergency Management, Tony Badia, Emergency Management Directors, available for any questions. Department pages begin on page 165, staffing 166.
Tony, come up, please. I know this department is relatively new, but you've had a chance to go through a couple of budgets before. Are you okay with your budget?
Absolutely, sir.
Okay, so you're happy with your budget? There's nothing you want to add or subtract?
Nope,
All right.
we're good.
Any questions from staff? Any questions for the Board of Supervisors? No? Thank you, Tony. Thank you very much. We'll go to risk management, conflict go ahead.
Shannon was happy with his budget. If you had any questions, he's happy to answer them. We can give him a call.
Oh, well. We can't ask him any questions. So if he's happy, we're happy. All right, so
Next-
move on to the next one.
Next, we have County Administration Communications. Kevin Tennell, Communications Director, is available for any questions. Department pages begin on page 165, staffing 166.
Well, he's never happy, but come on, Kevin. You're not, we want music in the background, right? Which is very important expense. All right, Eddie, are you okay with your budget?
Very happy, very happy. Yep.
And obviously, we're gonna be talking about a different budget, hopefully next year, when you have a little more leeway into more technologically advanced situations.
Okay, very well. But the
That'll set you up for the next one.
OMB made it real easy. Very, very good working with budget.
Right, thank you. Any questions? No? No questions? Okay.
Next, we have County Administration's Grants Division, Nancy Nine, Community Planning Supervisors, available for any questions. Department pages begin on page 165, staffing 166.
Nancy, and look, I do want to tell the board members that if there's anything that you guys have a question, make sure you stop me because, when I get this way, I get unstoppable. So just say, hey, I have a question or something because it really, it moves pretty fast. And I know that we have a new member who may be a little bit like, what's going on here? But just before we move on, let me say that this is truly the work of many months. I mean, by the time you get here, You have all met with the budget review team. You have done a lot of research. You have, basically put the budget together for your department. And when you come up here, you just basically come up here to either confirm that you're okay with the budget, or if there's some issue that remains, you have an opportunity to bring it up, okay?
And to let the public know, Mr. Chairman, we've already had the opportunity to review the majority of these budgets prior to this meeting.
And yes, and for the public's benefit, we've had the opportunity to review the items in this budget plenty of times. We have met individually with the budget review team and discussed most of them, if not all, this item.
So it's not just a rubber stamp.
No, it's not. It's not, and we'll get to it. All right, any questions from Nancy? Nancy, are you okay with your budget? I'm happy with it. Yeah, well, all right, you're happy, we're happy, thank you.
Next, we have the non-departmental budget. Susan Thorpe, County Administrator, is available for any questions. Department pages begin on page 260, staffing, page 260.
Susan? Non-departmental, you happy?
Yes, we're happy with
The
our budget.
non-departmental area happy?
Yes, the whole non-departmental area is happy.
Right.
May I ask, Mr.
Sure.
Chairman, what is the non-departmental?
Explain to Supervisor Lyons what the non-departmental line item includes.
Non-departmental, just as I'll turn it over to Tony for more details, but non-departmental means things that don't reside in a certain department or are specific to a department. For instance, in this year, we have the life cycle, all the life cycle computer replacements for the general fund are in non-departmental. Instead of dividing them out into the departments and then spending the money,
Together.
it just keeps it more efficient. Also, all of our outside party funding is in non-departmental. And we also have set-asides if a number of departments ask for something like additional travel funds or additional money for witness fees or legal fees. We put those in non-departmental so they know that if they do run out of money in their department, they can tap into the non-departmental, but we don't increase their budget overall unless the need is actually there.
You want to redo that, Tony, or is that enough?
No.
That's fine?
That's exactly what my note said.
Right. Thank you. Go on.
Next, we have Human Resources. Felicia Frosto, Human Resource Director, is available for any questions. Department pages begin 216, staffing 217.
Good morning, Chairman Reyes, members of the board. I am very happy with my budget. If there's any questions that I could answer for you, be happy to at this time.
Does anybody have any questions for the Human Resource Department? Any comments? Nothing? Good. Oh, you're gonna you have a PowerPoint presentation?
She does for the to go over compensation.
Oh, you wanna talk about compensation? Is it, okay, all right, well, do it. Fine. I thought we were gonna wait till the end. That was an interesting.
Instead of having Felicia come up twice, since she's HR and she's also doing compensation, we'll have her, since she's here, go ahead and do that.
I knew this couldn't last forever.
You were on a roll, Mr. Chairman.
Oh, yeah, I know. It came to a screeching stop.
Get it?
We can do it. I can set it up with her. We'll continue.
We'll set it up later, thank you.
Oh, so we set it up later? It's not ready. Are you sure? All right, we can discuss,
Yeah.
compensation at the end.
That would be
okay?
fine.
That's what I wanted to talk
Thank
about.
you.
Anyway. Thank you very much.
Next, we have Information Technology Services. Cliff Summers, Chief Information Officer, is available for any questions. Department pages begin on page 223, staffing 224.
Good afternoon, Chairman Reyes, and members of the board. Cliff Summers, Chief Information Officer, Yuma County ITS. We're happy with our budget, and I'm here to answer any questions you may have.
Are there any questions for Mr. Cliff? Mr. Cliff. For Cliff? No? Well, thank you very much. You're happy, we're happy. The Health District.
Next, we have the Health District. Diana Gomez, Public Health Services Chief Health Officer, is available for any questions. Department pages begin on 202, staffing 203.
Morning, Chairman Reyes, members of the board. Diana Gomez, Director of Public Health. Happy to answer any questions. We're happy with our budget.
Oh, you're happy with your budget, but it's a very large budget that is a moving target a lot. have you been able to account for all the grants and subsidies you seem to be receiving all the time?
Yes, we are factoring that into future growth. We've also factored it in to be able to not only provide some additional support and resources for us, but to members of our community that we work with.
And you realize that at this particular time, we're not changing the health district rate? Are you okay with that? Fine? You think you can, well, obviously you do, right? You do think you can manage your budget this way?
The health district is funded with a sales tax,
With the sales
1.112 cent sales tax.
Confuse you with the flood control budget, the library budget. Okay, any questions for the health department? No? Thank you, Dan.
Thank you.
Next, we have the library district. Lisa Mendez, library director, is available for any questions. Department pages begin on page 253, staffing 254.
Chairman Reyes, members of the board, Lisa Mendez, library director. We're happy with our budget.
You've seen what they've done to your tax rate, right? Split it up in two. You okay with that? Right? As long as it stays the same, huh?
Yeah.
Any questions for the library? No? Thank you very much.
Next, we have the public fiduciary. Claudia Ramirez, interim public fiduciary, is available for any questions. Department pages begin page 272, staffing page 272.
Good afternoon, Mr. Chairman, members of the board, and we're happy with our budget. Do you have any questions for us?
Sorry, can't hear.
Can barely hear you. You're gonna have to take the mask off.
Good afternoon, Mr. Chairman, members of the board. I'm happy with our budget, and if you have any questions, I'm here.
You're not wearing black because of the budget, right? Okay, any questions for the people? No? Thank you.
Thank you.
Next, we have housing. Jesus Roldan is housing director is available for
I
any.
know I'm gonna ask you guys to come up and take your mask off a little bit, because I think it does muffle the sound, especially because you may not, we don't have a way of adapting the sound higher or lower at the same time. So if you take off your mask, it'll be clear. It's okay. You can breathe on Tony Struck. You got him vaccinated 3 times. So, Roldan, are you?
Good afternoon. Yeah, I'm happy with my budget. So.
What pages was that on?
210.
Thank you.
Okay, so the housing department budget is 210. And if I may, just as a comment, most of the housing department budget, if not all of it, is federally funded. It's all come through HUD, so it comes through us as a separate item. Mostly it's like a pass-through item. We do have sometimes a little bit of, what do we call that, allocation, that indirect cost allocation. Every once in a while that issue comes up, but it's pretty much dealt with or has been dealt with, and you're okay with your budget?
Yes, sir.
Any questions from the housing department? If not, thank you very much, Mr. Roldan.
Next, we have the public defender's office. Michael Brees, the public defender, is available for any questions. Department pages begin on page 266, staffing page 266.
Good afternoon, Chairman Reyes, members of the board. I'd just like to recognize that one of the accommodations we made in the trial I just completed this year was the speaker in court would remove their mask, and we were careful in there, but that's actually a good solution for the speaker to be free. I'd like to take this opportunity to thank the BRT for all their consideration. I'm not going to say I'm happy because I didn't ask for everything I really wanted, but what we asked for we got, and we'll be able to work with it this year. And I'd just like to take this opportunity to report to the board and to the people of the county some of our accomplishments this year. We've managed to retain almost 75% of the high-end and complex felonies, almost 80% of the appeals, post-conviction relief at a third of them, juvenile cases in the 70s, and our total felonies kept within our office alone are 61%. In addition, our cost per case, we were able to maintain at 1,280, which is outstanding, at the same time providing outstanding service. And finally, I just report to the board, we have 4 interns this summer. You approved paying 3 of them, but we have such a great internship, another volunteered to come and work without pay. I'm available for any questions.
Was that the best guy?
Yeah.
Do you have any questions? No? Thank you very much. I'll ask you about the movies you have gone to see lately, but we'll take that out.
There's some good ones.
From a movie buff to another movie buff.
Right.
I think we see each other more at the theater than we see outside.
Anytime's good, though.
Thank you.
Next, we have the Legal Defender's Office. William Fox, interim legal defenders available for any questions. Department pages begin on 248, staffing 248.
Good afternoon, Chairman Reyes, members of the board. I'm Bill Fox from the Legal Defender's Office. I'm available for any questions.
You have any questions from the legal defender? Not? You okay with your budget? You're fine?
Yes, sir. Thank you.
Oh, thank you very much. Financial services.
Next, we have financial services
Operations.
and improvement districts. Gil Villegas, Chief Financial Officer, is available for any questions. Department pages begin at page 195, staffing 196.
It's good to continue that way.
There's always one presentation.
Yeah, there's always one
And it
dreaded
kills.
PowerPoint presentation. We're not gonna be able to avoid.
Oh, right here, sorry.
Oh, it's an important one, and I do remember, and I want to, before you begin, acknowledge the fact that over the years, you have made this issue or this particular item much more easy to deal with. There was a point in time back some years ago where we had trouble even getting some of these improvement districts to send in their numbers in time, on time. Cities and towns were sort of waiting too long, and it made for us to have, to have to adjust the budget later on in the process, which hasn't happened in some time. Again, credit to the fact that you guys handled it so well and so professionally.
Appreciate the acknowledgement. Yeah, it's been taking a lot of communication for us with all the districts, so all their information is in on time. Regarding the financial services department budget, very happy. We continue to do some line item adjustments so I can better reflect my spending patterns. So we're happy with our budget. Now, coming to the improvement districts, if there are any questions about finance, I'll proceed on the next one. Okay, you should have 3 handouts already. One, typically what we do is the legal size handout.
Yeah,
Gives you a summary of all the improvement districts that we have set up an appropriation for them. There's also one page that tells you all the districts that will need an additional work done this year. And usually that work is being done by the improvement district coordinator. Today with me, Rachel Salworth, and also Elsa Garcia, my accountant. So what we just distribute to you is a presentation that I'm going to do. Usually this presentation gives you a brief summary of all the districts that we have. If you have more questions, any more detail about a district, I'll ask Rachel to come and help us on that. Okay, so improvement districts today, well, for this budget cycle, we have 161 active districts. 72 of them are general purposes, and they can go from just maintaining a basin, doing some irrigation, things like that. We have 49 streetlight districts. Those are poles, and we pay invoices for them, the electricity for the districts as they requested. And we have 40 irrigation districts. That's just flood irrigation. In addition to the 161, we have 3 special assessment districts. Those are debt that the district has issued. We service the debt. We issue the reports for them, and we make sure that the payments are done. We have 1 capital improvement district for this year, for fiscal year 21-22, and that's Tacna Water District. And we have the revolving fund, and that revolving fund, as provided by statute, is the one that holds all the money, coordinates when new districts are being improved, coordinates when we have projects that we need to go through. And that's what Rachel's salary comes from. Total, we have 166 funds served in this current fiscal budget. This fiscal year, we're picking up 3 new districts. They are listed over there. Also, we have 3 districts that drop out from our budget list. That's why the net effect is 0. Also, following last year's recommendation, we dissolved, actually with the help of the assessor's office, we dissolved 12 districts last November. We're going to continue to see if we have more districts that we can dissolve, things that we can turn over to the city, but right now, those 12 are the ones that did not have any activity for the last 5 years. If we have more districts that are following that, like I said, we'll continue to bring them to the board so they can be properly dissolved. I usually provide this slide which summarizes all the fees that we're charging all our improvement districts. You would notice that we have 2 fees that we charge to all the districts, the general fund fee per parcel, $3.60. This is for the regular maintenance that we do to all the districts, the invoices that we pay, communications that we have with them. And then we have the revolving fund rate per parcel, which equates to $4.47, according to the amount of work that the coordinator and the account specialists are going to spend with those districts. The more time that they spend, the service level increases, so that fee gets increased as well. This is part of the single sheet that we provided to you, so you have a listing of all the districts that they're going to require the additional work. Total for this year, we're going to collect a total $218,105. It's only a $2,239 increase, or 1.0%. This administration cost has not been revised since May 2017. I think that's when the previous CFO and the coordinator came before the board, and they explained the methodology. We were trying to update the rate this year, but we thought it would be better just to keep with the same one, so there were no increases to the assessments to all the districts. Fairly quickly, the administration cost, the general fund, like I said, it was last revised and implemented in fiscal year 2019. It takes salaries from the assessor's office. This is the people that look at the maps, make sure that all the boundaries are correct, all the parcels are properly counted. There is a fee for administration as well, the ones that take care of all the notices, all the paperwork that has to be done here in administration. Financial services, mostly our accountant, and we have supplies and services. Once we calculate the cost, we divide that by the total number of parcels, and that's how we arrive to the rate per parcel. The idea is for the next fiscal year, coming 22-23, to do again the whole presentation and to see what the new rate is going to be. I did a quick calculation just for your reference. Probably it will go around 50 cents more. So this year we decided not to increase it. The revolving fund, pretty much the same thing. We are not trying to make a profit out of these fees. We're just trying to recuperate whatever time, whatever effort we invest. So for the revolving fund, we have the coordinator and the account specialist salaries, supplies, whatever it's going to take them to do their job. And then it gets adjusted for all the fees that we collect, the revenue. So the net cost divided by the parcels, that gives you the rate. Summarizing, the recommended budget for improvement districts calls for a total appropriation of $1,920,000. It is actually a decrease from the prior fiscal year, which means we didn't levy as much taxes, or not much taxes were needed for the services that were going to be provided. New assessments, $1 million, which is a decrease as well. Other revenues are increasing, and these other revenues are miscellaneous fees or charges that we get, interest income that we receive for some improvement districts that have a fund balance. The total fund balance that we carry is around $899,000, which is a decrease. 11 improvement districts increase more than 50%, and they are highlighted in orange, I believe, on your sheet. The majority of the time is because they're either new districts or because they're going to start a new project, and we need to properly assess their expenditures that they're going to have. For the special assessment districts, we have 3 special assessments. El Prado, which the debt has been satisfied. What we're doing in 21-22 is just cleaning up the funds so we can clear it. If there are any funds available, we're going to transfer them over to the operation funds. The Gadsden borrowing that they did is still going on. We have $112,000 outstanding, and then B&C Colonial, $2.1 million. And these are the billings that we do, the special assessments that we do, and the money that we collect.
That Gadsden was for sewer system.
I believe so. That's what it was.
Sewer system. It just, it just seems incredible to me that those people got a sewer system and they only have $112,000 outstanding now. That was a millions of dollars sewer system to connect to the city of San Luis. So when you put in Gadsden, maybe you ought to add sewer line or something so we can identify.
Hard to believe BNC was 10 years ago.
Yes.
It's getting there. 10 years ago. Capital improvements, that's the TAC 9. The appropriation is 2.7. I believe the project is going to be funded. They're going to borrow some funds, and there are also some grants that they're going to receive The revolving fund, not much change on the appropriation. It's pretty much minimal, the increase, and usually has to do because of salaries. So we're trying to keep our assessments, our fees level with the prior fiscal year. To soften the blow, I guess, from the pandemic and all the problems that we had. So I believe that was my last one. If there are any questions, I'll be happy to answer them.
Are there any questions? I mean, you know, actually managing those improvement districts is one of the tasks that we have as supervisors. But I just don't want to leave the misconception that we actually set most of, you know, we set most of the tax rates, but they're normally based upon the cost of running that improvement district. We don't set them to, like you said, we don't set them to make any money or to, as a matter of fact, I think by state law, we're precluded from making money out of managing these things. If I remember this correctly, I think that as a county, we have to be careful because we can't make it a money-making proposition. We have to keep it for the cost that it takes to operate it. At least that's part of the state statutes that I remember. But again, a lot of the issues that we have are not normally with improvement districts. There are, but not those kind of improvement districts. There are school districts and so forth.
Special districts.
Special
yeah.
districts, that's what I call it, right. Go on.
Yeah, improvement districts, the board of supervisors sits as their board directors. Special districts, they'll have their own board directors, and school districts and so on and so forth. That's all I have, Mr. Chairman.
All right, any questions? That's improvement districts. Okay, so thank you. We're now getting to the item, the last item in terms of listening to the general discussion about compensation, right?
Yes.
Okay, so we'll have Felicia come up again, and hopefully she'll be ready to put that presentation in front of us. I was gonna say you were between us and lunch, but that's not the case. We already had lunch, so.
Good afternoon. So I will be presenting information on compensation and employee benefit components that's being recommended. I know that Susan had addressed information with regards to PTO buyback. I'll be making reference to our reclassifications that were submitted from the county as well as from the courts, the judicial merit system. Giving a brief overview of the on-call duty pay, and then discussion on paid time off and different options there. And then the employee benefits that we offer through our LRAP, otherwise known as the Loan Repayment Assistance Program, and how our tuition reimbursement program is doing as well. So this is a brief overview discussing how we evaluate each year our classifications of certain positions. We have supervisors, directors who discuss an employee's current job, and they've identified that through their organization that this particular position requires some additional skill level that the individual has been performing. And so they submit this particular position to Human Resources in the month of December, so that this way we can do a reclassification study that gets conducted and reviewed between the months of January and February. And then the criteria is that the employee has to have been performing that job duty for over a year, have received their evaluation showing that they have been making a meets or better, and then that's when they're submitted in December. So this year we had in FY 21-22 that we received were 19 requests. Of the 19 requests, there was one that was withdrawn from Sheriff's Office, and so we actually are submitting to the Board of Supervisors 18 that have been recommended by the County Administrator as well. 4 requests we received from Superior Court. They were reviewed by their judicial merit team, which then forwarded to Human Resources. So overall, from county perspective, we have the 18, 14 being recommended by county departments and offices. It's broken down for you by the general fund, health district, jail district, and special revenue, which then totals, as you can see, $73,000. The next area of discussion is our on-call duty pay. We have established this program. It has been effective for us for over 10 years now, but the last time that we made a change was in July 1st of 2018, and that's when we increased the pay rate. And as you can see there, our pay rate presently is $1 per hour for any non-exempt employee that is currently going to be out on-call until they are called in to perform their job duty, and then at that time are they being paid at their regular rate of pay. This applies for designated classifications that we submit to the Board of Supervisors each year. So currently the departments or offices that fall under it is health, our housing, facilities management, public fishery, public works, ITS, and the sheriff's office. Previously, our budget has been submitted at around 3,000, but with regards to the recent pandemic, that is increasing for this next budget to be recommended at 53,000. We have our next benefit option is our PTO, which is utilized by our county departments and elected offices, and then the vacation buyback, which is utilized by our court offices. So Superior Court, Adult Probation, Juvenile Justice Center, Clerk of Superior Court, they fall under the vacation buyback program. The eligibility for this particular program is that our employees have to meet a certain criteria that through board approval, a certain amount is recommended and then be able to be approved for funding. As you can see here, our employees have to work at least 12 months in advance for prior service as of December 1st. They have to receive a meets or better on their evaluation. They also would have had to utilize at least 40 hours, not 40 hours consecutively, but 40 hours throughout the whole year, so that this way they will be able to show that they've utilized some time. But we also want them to be able to maintain a certain number of PTO or vacation hours on the books, and that amount is 80 hours. Depending on the board supervisor's recommendation, depending on your approval based on the recommendation from the budget review team, normally in this case it says that they're able to sell up to 40 hours. We have had in previous situations in FY 2017-2018 where our employers were able to submit a minimum of 5 hours up to 20 hours at that time. As you can see here, what we projected was $464,000 that would have been utilized during that fiscal year. The actual amount that we utilized amongst all the different funding sources was $328,537. And then you can see the difference there of $135,769. What we are bringing to your recommendation today is we have two different options for you based on discussions that we've had with the Board of Supervisors. Here's an example for you based on minimum of 5 hours, maximum of 20 hours. The impact to the general fund, as you can see there, is $238,000, special revenue $214,000, with a total of $452,000. The estimated use, or say estimate of total usage that participants might apply is 70%. And that is truly a rough estimate. So you're seeing that for the general fund, it would be $166,844, special revenue $150,242, with a total amount of $317,087. So this is minimum from minimum 5 to 20 hours. On the next slide, we've provided you another example with the minimum hours of up to a max of 40 hours. And so you can see here with the general fund impact would be $467,088, special revenue $418,260,000 there, with the overall cost of $885,349. If we had an overall estimated use, again, we're projecting that it would have an impact to the general fund of $326,000, special revenue $292,000, with a total amount of $619,000 overall. So we wanted to be able to provide this information to you today so that this way you would have a better understanding of what the cost impact could be. But we would also take in consideration the eligibility requirements that the employee would also have to meet. When we,
Before
yes, sir.
you leave that, before you leave it, I've already had problems with the PTO process because I felt, employees are going to save hours, instead of using them. So I kind of agreed to have a PTO program. I just, and it seems to me that once you have one year, employees will expect to have it every year, and I didn't want that to be the case. This is a very, to me, special year this year, 2021, 2022. Is it 21, 22? Yes. It's a year where I think we may be able to have a little more disposable income that isn't going to come from the taxpayers directly. Everything comes from the taxpayers. So my concern is not really supporting the PTO buyback program. My concern is supporting it to a level that is expected next time. And I know that we talked about it being used at a rate of maybe 70%, which is the estimated use. But that's just what we estimate based upon the past. It could change at any time if people, for example, now that people stay at home more, now, they may have a little bit more accumulated. Now, the question I have, is this for the next fiscal year, or is this for, the next fiscal year, meaning to me, will this become effective July the 1st? In other words, so this is a backed up situation, right? These employees will be selling the time, or selling the PTO back to us from the past, correct?
So Chairman Reyes, the employees are going to be selling the time that they have accrued at the time, not from the past. So whatever they have on the books as of whatever that time frame, that is what they are going to be looking back at. And then we go back with regards to making sure they meet that requirement of.
That's it. You can't, you have, what you're saying is by the time that anybody wants to use this, they will have to have accumulated time.
They would have to
have
accumulate.
They do it. You can't go back and create hours, is what you're saying.
That is
right?
correct.
You have to have the hours backed up.
Mm-hmm.
But a lot of these employees are going to look at us first and say, well, is this going to be available or not, before they decide whether to use it or not. If I was going to wait until the last day of June to decide, it would be a little too late, because if you either take the time. Now, what's the alternative if people don't use the buyback? What do people do with their time that they have excess time?
Mr. Chairman, they continue to accrue. There's no limit on
I'm
accruals.
getting to it. Yeah. They continue to accrue to what point?
Till they leave and we pay them.
Right, so
They accumulate time continuously until they resign or retire. They can only cash out a certain cap of that time. So you could only, if you came here, well, why don't you explain?
So Chairman Reyes, members of the board, that we had previously, all of our employees under the county PTO program, you had a payout of 400 hours. We made some changes back in October of October 1st of 2018, that then all of our employees are grandfathered before that time are 400. Anyone hired after that time, they're capped out at 280 hours. And so for our vacation buyback, our vacation program on the court side, their max is usually 240. If they go beyond the 240, they have to have approval by the presiding judge or the court administrator to exceed that amount. And then they also have a sick leave payout of up to, as long as they've been employed for 5 years, of $3 an hour up to 1,000 hours.
Right. So, I suppose you're going to have some questions about this. So, what we're basically saying, if an employee's been with us 20 years, let's just use 20 years, because it's, or 10 years, so they don't use that much, 10 years, and by now has accumulated, because it hasn't used the time, the PTO, as we call it now, PTO vacation time, they have accumulated 300 hours, to say, and now they want to start using some of them up. The only ones they can use are the actual ones that they made from last year, or can they go back and start using those past PTO hours they have gained throughout the years?
Right, they're able to utilize any accrued time that is currently on the books as of that date that they're wanting to utilize the time for.
Is there a way to limit the policy to just the year past? Otherwise, all those people are going to start selling their hours.
No, but you can't accumulate 40 hours in 1 year. Or
How much can you accumulate
it'll
in
be
1
the
year?
same. It's gonna be the same.
What do you mean?
Because if I have 300 hours and this next year I'm gonna accumulate another 40, I can use 40 from last year and still accumulate this.
Yeah, but if my point, I know that one. My point is you don't have any, right? All you have is the accumulated past ones. No, you don't have one from last year. You just have 300 accumulated from the years past. Can you actually use one of those, or 3 or 20 of those 300 to actually sell them this year? That's the question. I know what you're saying. What you're saying, it doesn't matter when you make them. You're saying if it was last year or the year before, they still have 300, right? So they can use the 300 accumulated ones, start selling them. Is that correct?
Not all 300.
No, of course not. Just the 20 or the 40, depending.
They would
on
only
what
be
it
able
is.
to sell the amount that the Board of Supervisors have designated that they are permitted to sell forward. And they can take that from their bank.
Maximum.
Yeah, okay, I got it. So it's either we decide to do it, 1, at a 20 maximum, or to do it, 2, at a 40 maximum hours.
Yes.
And that time is time. They have gain over time. The question that I had obviously was answered. It said, well, they can use any other time before, which is why I said the past. and or what you presently accumulated from just last year, right? Does it have a, maybe I just didn't see it when you put it in there, but does it have a minimum time that you have to be an employee to start, doing that?
Yes.
5 years?
A year. You have to have worked.
A year, that's right, a year. So if you've been with the county a year and you had, you couldn't use your vacation, you couldn't use your PTO time, you have two choices right now. One is you accumulate it up until, you leave, or two, you can sell 20 hours or 40 hours, depending on the program we set up. Is that correct? Okay, all right.
But you have to use 40 hours. You must have had to use 40 hours during the year before, and still have enough to be able to buy it back. Buy some back.
Yes.
It does seem weird when you put in employee participation as voluntary. It's not like you can force them to, right?
Right.
It's not like you can tell them, you take the 20 hours or whatever.
So Chairman Reyes and members of the board, I know that we have had conversations in years past, and we always anticipate that our employers are going to jump on this and utilize all their time. And we have many employees that do not, because they utilize their time for reasons such as it's PTO. They already have some other underlying medical conditions, and they know that they're going to need that time for their own family medical leave and things like that. So we do have a lot of employees that take that in account, and they are very aware of their responsibility to ensure that they don't have to have that worry. Then our employees also are fully aware that this is truly a program that gets brought to the Board of Supervisors every year during the budget process, and they don't anticipate that, yes, it's a guarantee. What they do ask, because we state it every year, is that we bring it to the Board of Supervisors and you make your determination.
Right.
So they're very aware of that as well, of this as this is just truly a benefit for them, that if it's approved 1 year because we can, it's great. If it's not, then they also understand that.
Okay, I believe you.
And
Right.
it's only a
Yeah, I believe you. I don't believe everybody's going to say that, but I mean, I believe
But
you.
it's a year-to-year thing. It's not something that's a permanent every year.
Right, it is,
Do it every year.
it is a one-time cost to the county.
The last
The way
two.
I see it, it's either we pay it right now or we pay it when that employee leaves.
Right.
I think I didn't look at that as a kind of a sick leave bank because I didn't see it that way. But now that I remember that there's a reason why it's called PTO. You don't have to call it vacation or call it sick leave. You can have 3 hours of quote PTO that you don't know if you're going to need because you have a illness or something.
Yes.
Obviously you could, so it's, I understand that. And again, the only concern I have is the concern that was expressed at the end there by Supervisor Pancracy that the employees will expect it every year because we've approved it 2 or 3 or 4 years in a row. That's it, but it's not a big deal. And I think it makes for the employees realizing, I think, that we do look out for their benefit, when we can. All right. Any other questions or comments? No? That's it? On this one?
On this one. Then I just needed to provide you an update on our LRAP program, that we currently have 13 participating employees representing the offices of the legal defender, public defender, and county attorney office. And the total estimated cost to be ending as of June 30th this year will be about $42,190, and we've budgeted for the next FY 21-22 $60,000. So it's a great incentive program, and for us to be able to retain our attorneys.
Mm-hmm.
Yeah, no, we looked at that a long time ago, and we thought, when attorneys are coming out of school and they have a high debt, they appreciate the fact that they get paid a salary and then they get paid this additional funds to pay off their student loans, school loans. Now, it's not a big ticket item, but it is an important one for those employees, and it makes them feel they're part of something.
Well, and to pay back part of their loans, let me tell you.
Yeah,
you don't
that's
get
if
out
the
of
federal
law school
government
without
doesn't go ahead and forgive them.
A lot of those without debt, so.
So what's up?
And then our
Tuition,
next
yeah.
is our tuition reimbursement program. We did come to you earlier this past year to be able to ask about looking at increasing the amount from our regular $3,600 to now $1,800 for the year. And so we currently have 36 participants. We budgeted in FY 2021 $50,000. We're recommending for FY 21-22 $70,000. But from the program this year, we will have one paralegal certificate, which is great for our that particular office, and then we will also have 2 recipients who are receiving their bachelor's degree, one in finance and another one in business. And so, as you can see, the program is definitely working for us.
Remind me, Felisa, how long do they have to work for us after they get their degree?
A year. So as each year that they receive tuition reimbursement, we ask them to complete a year for us.
Okay, good. So for every year they give us a year.
Yes, that is correct. And,
Okay, go ahead.
and other than that, any questions? Be happy to entertain them.
Are there any questions about these benefits? I want to get into the big one. The big 2 or 3 or whatever % that we're going to put in.
Urging
That's going to
people
be
to
big.
get their degrees,
Okay,
that's
so
amazing.
any questions, Felicia, on those particular benefits? If not, Felicia, thank you very much. It was very informative. And we now will move, we finish all the items for discussion, and we'll go into the general discussion about the discussion and direction regarding the fiscal year 2021. Now, I know that every once in a while I just take over too much, and forgive me for that, but I want to talk about the 3% increase and how it's been set aside by the budget review team as opposed to how I see it. How I see it was actually, I started off with the opposite. It was 2% to everybody and 1% on the basis of performance, in other words, meet or exceed. Now, I'm really thinking and the other issue with that was the anniversary date, which I thought was a little bit difficult for me to consider fair because, some people are getting it right away, other people are getting it later, other people are getting it almost till the next year. So in reality, that was an issue for me. And I like to get that off my chest right away. I don't like the anniversary date thing, but I understand how complicated it is for you all to determine performance without doing an evaluation, and how difficult it is to do an evaluation in every employee that quickly so that you get those increases to them soon.
Supervisors.
So to me, this year it's going to be one of those weird years where I'm saying, why don't we simplify it and just give them a 3% increase at the beginning of the year and then just it. I mean, I know that there's going to be some discussion about performance, but in this particular year where we had COVID and we had all kinds of stuff, it's simply going to be very difficult to me to assess someone's performance when they were closed to the public.
Or
when they
home.
were, you can do it for public works probably, or the the sheriff department and some of the departments, but there's going to be some departments that essentially to me were closed to the public for 3 months or 4 months. And so this is one of those years where I think I'd like everybody to get their 3% beginning July the 1st, and whatever that pay period is, and just do away with all that work. There's a lot of work, and I know that the staff is going to have a problem with it maybe, but I just wanted to throw that out. I don't know if the rest of the board will share.
I am too.
I have an alternate solution which will achieve your goals, but also help with retention and equity between longer-term employees and new employees.
Oh, compression?
Yes. So my suggestion is, if you want everybody to get 3% the first pay period in July, we could do that. My suggestion is that you move the structure up 1% and you move everyone forward 2 steps. That way they're getting further from step 1. And so 6 months from now or a year from now, when someone comes in at step 1, the longer term employees are not at the same rate, because that causes a lot of problems for our employees. When we move everybody up the same, then nobody feels like they're advancing, and it benefits the newest among us. It doesn't benefit the longer term employees. That is the problem with just moving everybody up the same. We can still give everybody 3%. I would just like to do it in that different way, where you're moving the structure up 1 and moving 2 people forward 2%.
I know what you're talking about.
Yeah, you avoid having people stay where they're at.
Exactly. I think
3%,
that
but
would
stay
be
at the
more.
level they're at.
That would be
What-
more
is it going
favorable
to be
to
an
employees
At
as
the
well.
beginning of the year.
Yeah, July 1st.
I have a question.
Sure, question?
But Susan, let me ask you, let's say 3% flat out to everybody. Let's say it's $1 million in the budget, just numbers. By moving them up 1 step, will it be over $1 million?
It would be exactly the same.
It's not gonna be 3%, so it's gonna stay at 1
Just-
million. So moving them up to another step, it's not gonna raise and give them another
Step up.
step or that
raise.
amount, because that.
It'll equal out to 3%, correct?
I know what you mean. You mean, look, we're looking at recurring numbers. And so when we look at boosting people up to a certain level, you normally think, okay, once you raise them a level, their pay increases. You're not necessarily, you're looking at that, but yeah. So that's right. So what we're gonna do is, it doesn't matter.
Yeah, that's my question. Just as long as it's not, because if we said not more than what we have already agreed. If it's 3%, it's gonna be $800,000 throughout. And
Gonna be
then
800.
that's wanna be, that's the $800, no more, because I wanna hear when we're approving the budget and say, oh, it's because step one, or we give them a step, or a half a step that move them, and it's gonna be more than that, the amount that we agreed on.
We agreed to a 3%. We just didn't, what we were deciding on was the way. And the way I heard it initially was 1 + 2. And then I'd said 2 + 1. And then I thought, okay, well, this is getting too complicated. And this is one of those, and I do believe this is a different year in terms of a lot of stuff. And so this year, I think everybody's sort of worn out a little bit. Just fighting. I am a little reluctant because we use the last 1% for a performance sort of situation. And that may not be necessarily the case, but moving people up the steps does the same thing. It creates a compression, a solution to a compression situation because you're increasing everyone and you're not really increasing the individual. You're not moving them up. You're just leaving them where it's at. You're just increasing their salary.
The second and third year person isn't making the same as the first year person.
That's what I mean when I said, it's going to go up.
That's what the steps do, yeah.
All right, well, that was the only thing that I heard that I wanted to sort of, put out, that this is the year. And the other thing is probably, and we didn't get to talk about it, it's probably the health insurance issue, whether it's going to go up a little, what it's going to go up, are we going to cover some of it? I know for a certain period of time, we were sort of bent on getting the dependent. Yeah, no, yeah, but I mean.
Chairman, that decision was made by the board already,
No,
and so
it's
I
okay.
reflected
I'm not-
that in this presentation.
Oh, yeah, but I mean, it's a budget item, right? It is a budget item, isn't it? Is it? Okay, then what I'm saying is, for the rest of the board, in case we have forgotten, there was a sort of a progressive move towards having the employee cover more and more of the dependent coverage. It was 1% every year, it was that kind of stuff. I just want to tell everybody that the decision that the what you call it? Benefit team? Yeah, the benefit team actually said, stop with that right now. So, and I think we brought that up last time we were meeting. I just wanted to emphasize it. What?
I have a question.
Yeah.
They go up 1 step and they get 2%, right?
Actually, they'll go up 1%, which is a half step.
Do I go up half a step and then they get 2? I'm sorry, I just want to know. Okay, go ahead.
Same thing you're saying. I mean, it's difficult for us to comprehend.
I'm on step 1, now I'm going to be on step 2.
No, I'm on step 1. The structure goes up 1%. Everybody moves up. My step 1 just went up 1%. I'm still on step 1, but I'm higher by 1%. The entire grade goes up by 1%. So I'm still at step 1. My step moves, and so I go with my step 1%.
Okay.
I mean, with my grade 1%. Now I want to go 2% forward, so I go from step 1 to step 1.5 to step 2. Now I'm 2 steps forward, so I'm on my same grade, but I'm at step 2 and not at step 1.
But that's not a 3% raise.
Yes, it is.
It's only a 2.5%.
First, we all go up 1%. Then we individually go 2%.
2 more, but a step, but it goes sideways is only 0.5%, or going up is 0.5%.
We call it a half step, and it's 1%.
Got it. Okay. I just want to make sure, and it's based, and if they were to retire, it would be based on both going over and going up.
Right. Their salary will be 3% higher than it was before we started.
Got it.
Right. Didn't want to get into the complicated.
I just wanted to make sure of that.
All right. Like I said, I didn't want to.
Point of clarification, there are 19 individuals across all county positions that are maxed out. They're at the top of their step. So they would not go up, except the 1% where the whole grade goes up.
They still get their 3%, it just wouldn't go up.
No, they should get 2%.
What?
The people at the max should get 3% as well.
Why are we?
If you want to do that, then we have to move the entire structure up 3%.
Can you
But
just
then
give
that-
them a 2% on their salary like other people did?
When they're maxed out, they're maxed out. That's the maximum available for that position in the county.
But you couldn't increase their salary by 3%. I mean, they should remain at the same step. It just, you change when you.
How many?
If you-
19 people, that's a lot.
Yeah, I know. Look,
Okay,
it's
which
early
question
enough,
do you
but
want me to answer first?
I'm sorry.
Answer whichever one you choose.
The 3% one.
The 3% one. The people at the top of the scale not getting their 3%.
The way that the way that you were proposing, where everybody goes up 3%, yes, they would get it, because they're still at their max step, which is step 24. Step 24 goes up 3%, so they go up with it. If we do what I was suggesting, 19 people would be at a disadvantage because they would go up. They're at their last step. The whole grade goes up 1%.
There you go.
So they go up
So it
1%.
go up a little
But then
bit by
everybody
19
who's
people.
below the max goes up 2 until they hit the max.
So actually, it's gonna
If we
drop
decide
down.
that.
It's gonna be minus.
I want,
The 19
Yeah,
people
because
are
it
not
won't
gonna
be,
get
yeah, it
50.
won't be 1 million, it'll be 1 million less 19.
I want those,
I don't think it's fair. I think at one particular time, we made that clear, that the top people, the people who were making the most, we were going to change their percentages, because to them, not this year, last year or the year before. As a matter of fact, it was suggested by Supervisor Borges. We had a schedule or a rate that actually,
Right on the
was we're still in the budget. It's the compensation budget. Anyway, look, I like those 19 people to get their 3%.
I
don't
agree.
know if everybody else does, but it's going to increase
However
the
you
amount
wanna
that
do it.
Supervisor Borges said not to increase. What's the impact going to be? Does anybody have any idea right now? Is it going to be 20,000,
we
50,000?
have it in the budget, we have it planned for, so let's
We don't.
give them their 3%.
Go ahead. I know. It's just an unruly board, but it's okay. It's fine. They're
only
not
when
like
it's
that all the
What
time. Not you,
question-
my man. Not you.
What
You
question
think.
would you like me to
Sorry,
answer
Mr.
now?
Chair.
The question that
It's bored, and it's only a couple.
He's
that
the
are
only
doing
one
it.
talking.
I'm not gonna say.
He's
it.
lumping us all into it, and it's only one.
I'll back it off. Look, guys. Look. Okay. Here's the situation. The 3% to everybody. Well, hold on a minute, Lynn.
Okay.
The 3% that we wanted to increase it, at least I thought, was the 3% to everybody. Due the 1st of July. You came up with the idea that maybe we ought to move, the steps so that we don't create a compression issue. So that sounded fine. Then Supervisor Portia said, don't come up later on, tell me that there's 19 people that need to have their salaries go up because it's going to change the amount. So that's where we're at. We're at this point where you said your system it's not one of those rising tides that rise all boats. It won't rise 19 boats.
It will
because
rise
it's steps,
19
because
votes
it's
by
up.
1% instead
Well,
of 3%.
yeah, but that 1% is not 3%. It is 1%. And that's what Supervisor Pancracy is coming up at. He's saying, well, what is it fair for them because they topped out the grade not to get anything else. Now, normally those are the highest paying. Okay, well then, fine.
They're the longest tenured people.
There you go.
They're
So
not the
those
highest
people who have stayed with us the longest
calm
and have
down.
done their job
Just one
are
at a
the
time.
ones that don't get a raise.
Yeah, all
Sorry, I have a hard time with that.
All right, well, look, what we'd like you to do, this is not over. This is a discussion about this. What I'd like to see tomorrow is an accounting of those people. In other words, maybe they topped up the list or the steps, but they still deserve the 3% raise. So please give us a sense, and then we'll try to convince Supervisor Porches that the additional funds needed to cover those people are justifiable. All right? If it's not too much, I'm sure you can, but
funds already
it's the
in there.
principle of the thing, he would say. So is that okay? In that way, we can, get the. Is there
Any other topics?
no,
you'd
any
like
other
to-
topic, guys? Really? I mean, I do want to say something. I know that this seemed like really happened fast, but I do want to emphasize, this is just because there's been a lot of preparation for this. It isn't because we don't take this into, or it's not serious enough, or we don't have any questions. The fact is, that if there was questions, and there was questions, they were ask from the budget review team at the proper time. Now, this is not the end of it. We have a full day of hearings, or full morning anyway, of hearings tomorrow. There will be time. If you come up with something or you didn't think of something at this meeting and you need to bring it out tomorrow. It's fine. It's okay. I mean, that's what these meetings are for. And it might seem a little anticlimactic, but it is the result of a lots amount of work. So please, thank you very much for making it so simple and so easy. I can tell you as a long-termer here that this isn't the way it was. I want to thank Susan and the budget review team for all the work you guys do to make sure that this goes this way. All right. And regardless of all the discussions about, you know, all the stuff that we do and the jumping around and stuff, it's part of the process. And I'll tell you, this is nothing. I have been here, and I know some of you have been here when the items under discussion were heated up, and some of the board members were just not manageable sometimes, including me. I do want to say that. So thank you very much again, and I think that everybody here anyway can go home early. This is probably the end of it today, unless something else is up there. Is there anything else?
What we'll do at the end of the day tomorrow, we'll recap especially the general fund piece about the potential uses of the excess fund balance, because I think that's.
We don't call it excess funds. We use the funds that we have
amount
available.
Above the policy level.
Yeah, I do want to say that everybody that hasn't gone through this budget, and everybody has, excluding the new member, the way that the budget of the county works, we approve a tentative budget, and that budget cannot be changed once it's approved. You know, it can only be discussed until you approve the general one. But what's critical to understand is that if you don't put whatever item you want to do in the budget, whether you get the money or not, if you don't approve the budget item, it becomes a really major issue to be able to get it approved afterwards. So it's important that people understand the budget is like the top of the order that you could probably do. It doesn't mean you have to spend it. It doesn't mean you have to do all these things. It just means that you have to have it in a budget so that you can spend it if you get it. All right? So I just want to make that clear, because it does seem sometimes when we're talking about millions of dollars and we're talking about changes in the budget that are not necessarily normal. We are normally moving up percentages, 2, 3, 4%. This has been a very, very different year, and the possibility of getting more funds makes it even more challenging, because now we have to start planning for things that we may or may not do, but we need to do that, okay? So everybody, thank you very much. If I open it up, it's going to go longer. Anybody else? No?
Only 3%.
Only 3%. All right, thank you very much, everyone. Thank you.